Thank you, Emma, for your welcome. Ladies and gentlemen, this presentation will be quite brief, as you imagine, and it's supposed to cover the two sides of the new finance world, which are shadow banking and financial technology companies. There is one relationship between the two subjects, which is that these two offers correspond to an unsatisfied needs of the economic sector. This is what I will try to develop. Yes. This chart represents the growth rate of economy in different areas in the world. What is interesting is just the following: is what is presented, but also what is not. In other terms, you see the growth rate themselves here. You see differences, a lot of differences between areas, which we all know. But what is behind the figures is the level of savings and the question of the allocation of the savings towards the areas which need savings for investment. And this is one of the major issues. We can see a lot of imbalances in terms of savings between the Western world and Asia, for example, between Asia and Africa. In these areas, you see a dramatic growth, 5.2% in ASEAN and in India, 6.3% in China. If it can be lower, it can be higher. Doesn't matter. The fact is that there are piles of cash in these areas, and these piles of cash don't have enough interesting projects to fund. And therefore, the question is not only the distribution of savings all over the globe, but also the distribution of risk appetite, which is really at stake. We all know about the questionable result of the quantitative easing policies in Japan, in Europe. Not to mention in the UK, because the growth in the UK is probably not related to the easing of the Bank of England, and it's also a question in the US. But we see that with quantitative easing, with a lot of money inflowed in the banks, we see the results in terms of growth rate is what you see. So there is definitely a question to ask, which we will address a little bit further and during this panel. What is shadow banking and shadow banking versus bank? You have in this chart three funnels, number 1, 2, and 3, which is the channeling of funds. We have the lenders on the one hand and the borrowers on the left-hand side, and the banks in between. But the banks have different responsibilities. One being to lend and to grant loans. Another one is to underwrite borrowings. The third one is to act with repurchase agreements and loan of securities. They can play with deposit. They can recycle deposit. They can recycle collaterals. They can fund a special purpose vehicle. But also, one thing is between lenders and the borrowers, the third channel, which is the indirect funding, which is called shadow banking. Here, one important point, which is shadow banking is not the bank of the shadow. It's not the bank, it's not finance of tax haven. It's not finance of non-regulatory charts. It's about funding and it's about finance without the banking sector. That's why it's called shadow banking. Doesn't mean that they fight with the sector will fight with banks, but that's also the point. And it doesn't fight with banks because it concerns a lot of major institutions. Shadow banking reconciles interest between borrowers and institutions like insurance companies, like asset managers, like corporate themselves. I mean, the peer-to-peer lending, the B2B lending, the funding of receivables and payables is also a form of shadow banking. When it comes to the banks, the repurchase agreement operations, which the insurance companies also know quite well, this is also part of shadow banking. So the subject today of shadow banking is to try to define what it is, what are the operators, but also what the products are. Yeah. What are the products? Let's focus on three major items. The first one, on shadow banking, something which people need to know and to be sure of is that this is now a sustainable alternative to the bank credit model. This has become a sustainable alternative. There has been a crash of a crowdfunding company as early as yesterday, but this is very rare. In general, this system proves quite reliable, especially vis-à-vis the banking system. Also in crowdfunding, the question of the Bitcoin. And this is also something which we'll probably have to discuss. Crowdfunding is a way to create some money. I mean, this is a recycling of deposits, recycling of funds to grant new credits. So it's part of creating money. But there is a difference between crowdfunding and Bitcoin. Bitcoin being a currency which comes out of nowhere. You know the origin of the bitcoins, to pay and to create some money out of CPUs. That's something quite weird. And in Japan, for example, there's been a major scandal involving yakuzas. I mean, it's just about mafia. But having said that, Bitcoin, for example, is not something just for mafia. But the Prime Minister of England, David Cameron, has announced 6 months ago that he wants London to be the center of the Bitcoin in Europe, and obviously the French Senate has also declared that it will do its best to be the center of the Bitcoin in Europe. When on the third hand, so to speak, the US have already said that Wall Street will be the one. So that's also the differences that we need to keep in mind. Another thing about shadow banking is the place for fair securitization. You may have heard that the Commissioner of Financial Affairs of the European Commission has proposed a directive a week ago, presented a directive a week ago, about fair and standardized securitization. Question will be that to be recognized and certified as a fair standardized securitization, there will be a need for 57 points to be checked before it is recognized and certified as such. So this is probably a good way to promote securitization, but to promote with a rapid limit, and therefore securitization will, for the good or the bad, remain into the shadow banking area. On the other corner of the slide, part of the shadow banking, securitization we mentioned, but also all the asset-backed securities, which the Americans are very aware of, they are part of it, because this is a recycling of money that investors do not want to put, do not know what to send their savings, and it's part of it. I mean, instead of lending money for a certain given period of 5 to 10 years, via asset-backed securities, they have a collateral, which is the assets, real estate or credit card or car loans. But with this collateral, they have securities which are easily sellable. Also, the US private placement, all the private placement is part of it. The factoring, reverse factoring, the covered bonds, and the purchase agreement, which I mentioned. So all these products, which we all know pretty well as finance directors, are not part of the regulated banking operations. Third topic, brief topic, about the shadow banking geographically. There are different shadow bankings in the developing countries and also in the emerging markets, and they are all different. We see in the developed countries, let's talk about Europe, this is being regulated more and more, even though the capital requirement directive have proved to be probably a sort of barrier to the growth in the continent, unless what has been said yesterday about the fact that the public policies are not favorable to growth, but probably these regulations are not totally favorable to it. But we see what happened in the US. And in the US, it's not called shadow banking, but it's promoted as banking activities, but far more developed than it is in Europe. Give you an example. The non-banking funding in the US represent 85% of all the funding of the corporates, when in Europe it represents 62% and 55% in France. So again, we have the terms, we have the vocabulary, we have to know what we have behind. In emerging markets, we have divergences and convergences. In China, it's probably the parallel banking activities represent probably a bit more than 40% of all the funding. And thanks God, thanks to this shadow banking in China, the real estate has been quite booming, and it explains probably 2/3 of the growth in China. For 7%, it was around 5%. There are risks, which everyone knows, but they remain under control. In Brazil, this is a question. You know that the banking sector is under scrutiny. There are a lot of non-performing bonds, a lot, including public and private projects which are funding out of nowhere, which have been built in nowhere, no place, so no return on investment, and therefore there is a need for channeling the savings in Brazil. The Brazilian banking sector is also under the strict rule of the government when initiatives is not really on top of the agenda. In India, you know that the banking sector in India is very, very regionalized. When now in a big emerging economy and big emerging country, there is a need for a global coverage on all the subcontinent. So again, in India, the Central Bank of India has a favorable eye on the Indian shadow banking sector. So you see, again, shadow banking, to sum up the slide, we have different products that we have looked at, and also different meanings in the geographical areas. Coming to the financial technology companies, brief review of what exists, which is a transition between the shadow banking and the FinTech. You see briefly all the marketplace lending that exists. You see here, I have no pointer, but you see that you have yellow dots, one yellow dot in Europe, but we have red dot with a new brand in Asia and in Brazil. We have the next biggest markets are China, Australia, and New Zealand, and in some ways Canada. So again, a lot of things remain to be done. The largest place is the US and Europe, but you see many initiatives to be performed with an average return on investment of between 6 and 18%. Just keep in mind that 10 years ago, everyone was anticipated an ROI of 15% on the investment for the asset of the banking sector, which is really now out of reach. But there are other opportunities in the lending area to achieve or to accomplish that type of ROI. Whether it's too high, too low, appropriate is probably another question that we'll discuss, and probably a question of regulatory matter as well. On the FinTech, this brief review of what we are talking about. FinTech is not only about crowdfunding, as everyone used to say. Obviously, it's about lending, but not only. Lending is via crowdfunding, but it can be crowdfunding via distribution of securities, could be crowdfunding via raising capital, can be crowdfunding via raising loans themselves. There is also some FinTech in capital markets. It's a little bit more like the boutique shops, or the capital market, the advisory operations. In wealth management, with brokers, online brokerage, and customized advisory. Also insurance, and of course payments. We see in all the circles that over these five topics, 5 activities of FinTech, it covers the front end, back end, and middleware. And so there's front end, backware, and middleware in capital market and insurance. Something in B2C or B2B. Also financial services incumbents in all over the world: South America, Africa, North America, and Europe. So that's also something that we will probably discuss further, and something that is being addressed at the moment by the IMF, by the World Bank, because it's also a tool for development, and also by the major central bank. Having said that, you can imagine that the creativity of the inventors and of the leaders of these fintech companies, the creativity is on top of the agenda, and therefore they are not happy only with the given part of the fintech activities, but also a lot of them have decided to reach 3 sectors. The sectors are being Aggregator, Integrator, and Disruptor. We also all know that FinTech is a disruptive initiative, but not only. The fact of being Aggregator, and you see on the right-hand column who they are, is part of it. You see on the left-hand column what an aggregator is. You have different pieces of the value chain of banks or financial product, which are combined, and then they're aggregated, like Booking.com. Booking.com is a pure aggregator. We have Money Supermarket, we have a lending platform. Lending platform is a pure aggregating platform for all the pure lenders. The integrators, we all know PayPal, but not only. Integrators, they aggregate the blocks, and they repackage what has been aggregated into another product, and this is this new offer, which is integrated, which is proposed. And that's quite disruptive in the fact that no one used to do that. To be good as an integrator or as an aggregator, you obviously need to have a platform which is quite convenient, which also propose to the customers different quality of advice, different quality of checking prices, and checking quality of the products. And the disruptors, they just crack the value chain, to just crack it. And they propose each piece of the value chain, and this is what those that you have on the right-hand side, which are here. The disruptor, they are really disruptive. I've put, for your kind attention, this slide of an aggregator in insurance. You see, it's called Tunable Square. It's been created in a credit risk solution. And they have evolved into insurance and insurance of payables. So you see, go from corporation to credit, they use the resources of credit insurers, then reinsurers, and receivable financier. That's one integrator. And as a corporate, you go to that type of platform, and you have everything related to the credit risk and to insurance of receivable. My final words on the organization of and the future of the fintech corporates. The facts are the new private and corporate consumers appear. There will be hyperconnectivity. We will have more barriers. We will see the enrichment of contents and what people used to say or to mention as client experience. This is really part of it. A great importance of the data. Many people this morning talked about big data. Big data obviously is not an information as such. People will have to use big data to create information that will be delivered and paid for. Therefore, there will be a creation of new ecosystems. And what is probably at stake is the creation of pure banking platform as Aggregator and Integrator, and Disruptor, interface platform as Aggregator, compliance procedures and processes like credit risk analysis, probably business units with central bank agreements, light or heavy agreements, probably customer relationship management, because they are between big data which come from marketing department. There are also data which come from payment platform, and this payment platform will sell this data to marketing department in banks, in insurance, and also in corporates. And therefore, what remains as open questions, which will be up to you and up to the floor and up to my colleagues, is beyond automatization, what will we talk of client experience, and how the finance director, treasurers, and cash managers will be able to help, and also the accountants. Will there be any substitution of product, any possibility? Limits of big data in Treasury is one thing. It's too big a topic to discuss now, but we will have to keep it in mind and maybe discuss that next year. And what is the major implication for the treasurers in FinTech? This is also an open question that my colleagues will definitely address. Thank you for your attention.